welcome to Mint. I'm Nasrin Sultana. Indian markets have reacted negatively to the budget proposals made by Finance Minister Nirmala Sitharaman on Friday. Let me take you through all the concerns that the markets are getting jittered about. Number one is the increase in the public float by listed companies to 35% from the current 25%. According to the proposal, companies where the promoter stakeholding is more than 65%, they have to reduce it to the norm, which is 65%. According to our analysis of data, BSE 500 companies will, among the BSE 500 companies, will have to sell shares worth 3.17 trillion rupees to meet this norm. According to analysts, this will have an impact on IT companies, especially TCS and Wipro, where the promoter shareholding is very high. Number two concern that the markets are very much worried about is the taxation on the buybacks, which is at 20%. So this means that that companies which give buybacks to the shareholders, they'll have to impose a 20%. Remember, last few years we saw slew of buybacks by IT companies. According to our data analysis, they were buybacks worth 1.43 trillion in the last 3 years. Again, analysts say that this will impact majorly the IT companies which were into buybacks in the last few years, especially by TCS and Infosys. Number three concern, which actually rattled FPI investors in markets today, was the increase in the surcharge of ultra rich or the super rich income earners. According to the proposal, the LTCG or the long-term capital gains tax on FPIs would increase to as high as 14.25%. I'll take you through the effective tax rates. According to the budget proposal, the tax rates on long-term gains by the FPIs will become 14.25% from 11.96%. For short-term gains, it will be 21.37% from the existing 17.394%. For the short-term gains on derivatives and debt securities, the taxable amount will be as high as 42.74%. This had a lot of FPIs into a very worried mode. Remember, FI money has been consistent into Indian equities, whereas DIs have been on the sell-off mode. If FIs get on a sell-off mode, it could kind of dry up the liquidity in the market and could be very, very critical for Indian markets sustaining in the momentum. I'll take you through what the foreign brokerages are talking about the budget. According to UBS, the budget seems to have refrained from providing fiscal stimulus to boost near-term growth, but rather used this as a medium to lay down the path for taking India towards 5 trillion economy by 2025. According to Bank of America Merrill Lynch analyst, they say that the budget is not the catalyst for stock markets were hoping for. Little is expected to happen in the long term, and they say that unless growth improves, the broader market will likely remain weak given high valuations and poor earnings. Remember, if you're expecting the quarter earnings for June quarter by tomorrow on Tuesday, and it's not expected to show any signs of revival. According to Nomura, the fiscal deficit target lowered on the in the budget, and the focus on sustainability is a positive for the markets. However, it says that tax buoyancy is likely to disappoint and will require expenditure pruning to meet the budgeted fiscal deficit target. However, it says that the positive overall signal should supersede these concerns for growth now. We'll have to wait and watch what the FPIs take into their stride. Will FI money sustain, or will DIL get into buying to maintain the buoyancy and the momentum in the markets? Thanks for watching. For more details, stay tuned.